Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. A continuation today of the theme that we've been following for the last few weeks. And that is that we've got the channel at the top here and the support lines of this channel at the bottom here. And currently in the last 3 months, we've been following this trajectory down and we're now having this recovery in this period here. And along this trajectory down, what I want to show today as well is that there was a head and shoulders pattern developing around the $59,000 mark here. And a similar one is now unfolding here, which I've been mentioning for the last week or so. So we'll have a look at what we can learn from over there over here. But before I do that, the usual disclaimer, please remember all my videos are for educational purposes only and nothing should be taken as financial advice. Please do your wider research before making any investment decisions, and nothing should be taken in this video as a signal to buy or a signal to sell. I'm just giving you my perspective and letting you know what I'm doing. I want to take you to the Twitter page where I've just posted quite a number of quotes today. I think personal development is very, very important as part and parcel of learning about cryptocurrencies. And I've also posted this video here, which is an amazing video by many of the most successful people over the last 30, 40 years. So please have a look at this. And if you want to go to my Twitter page, then please look at the link below each of my videos. You'll find the Twitter link there. Okay, back to today. So we've got this channel that we've been forming over the last 12 months. And it's going up and down on this channel here. We're forming this double bottom pattern here, hopefully to take us to much higher levels over here. Currently, we're forming this downward trajectory, which we seem to have bottomed out at around about the 32,900 level down here. We're trying to make up our mind whether this rally here is a relief rally, which is going to bring us back to testing these levels down here or a little bit higher, or whether this is the first leg of the recovery like we had over here to much higher levels over here. No one knows the future. All we can do is take a perspective of what's happening over here. And some of the things over here are these basically, and I'm going to go through the micro analysis of this. So if we have a closer look at this, what's happening here, currently we're forming this inverse head and shoulders here with the left shoulder, the head over here, and the right shoulder over here. Now, many people ask, how do you play this inverse head and shoulders? The way I play it, and please remember, all traders and all investors have their own unique style of how they play any market. And I can only tell you what I do. And it may be different to what other people do. The way I'm looking at this, and if you've been following my videos, you'll know that I'm waiting to jump on the price. And the two prices I've given you are these two levels here at the $45,500, $46,000 level and the $40,000 mark here. So normally you'd play this whereby we come up to this neckline here, which is currently at around about the 45.5, 46. So you have two options here to actually jump on the price at the break of the daily candle of 46k around here. Or if you want confirmation and play safe and be conservative, you could wait for the price to come back and retest these levels to give you that bit more confidence that we have finally broken from this 46k and then to ride it up that way. So that's the price to go long on. And somebody in the Twitter mentioned about stop losses. You'd put the stop loss at just below the neckline here. So maybe at 45,400 or 45,000 itself, if you want to be giving yourself a little bit more leeway here. So the question is, what invalidates this inverted head and shoulders pattern? So when you look at this picture, you can tell actually quite obviously that the price has come to this trend line here with both shoulders now quite well formed. So obviously, if we break this line here, and if we want to be really safe, then take it to the bottom of this candle here at around about 39,600. So if the price breaks down below 39,600, then the whole of this inverted head and shoulders is invalid. And most traders, especially swing traders, at the break of the 39,600 will actually take a short here. Now, I don't short the market. For me, that's very, very dangerous territory. So let's see how this plays out. But these are the levels that we've got so far. So we're still in the middle of these two trend lines, these two very strong support and resistance lines here at the 40,000 and the 46,000. Now, we did have an inverse head and shoulders over here, and usually they are bullish and tend to, with a high degree of probability, break to the high side. But this one here, if we look closely, we can see that it may not look like an inverse head and shoulders, but if we go to the 4-hour time frame, you can see that quite clearly. So this was the inverse head and shoulders over here. We had basically two shoulders. So this was an extended left shoulder here. Then we had the head, very similar to what's happening currently. And we had at the same neckline here, the right shoulder. And instead of where we are currently in the middle of the right shoulder, instead of coming back up and retesting this neckline, which was around about the $59,000 mark, the price from here actually broke down. And this break here, like I've just explained, is what actually invalidates the whole of this inverse head and shoulders. And this fall was the flash crash that we had on the 4th of December, down to 42,333. So we have to be mindful that just like over here, while we expect the price to break to the upside, there is always a 20 to 30% probability that we break to the downside. And where we would retest the downside would obviously be on this trend line here, which we haven't yet come back to retest. So we broke the trend line over here at around about the 4th of February. But since then, as per normal, you would expect Bitcoin to come back and retest it anywhere along this line here. We haven't yet retested it. So it may well be that this falls down. And if it does, then this would be a natural place to be testing it around about the $37,000 mark. And of course, if it breaks that level, then we could go all the way down to these levels again, around about the $32,000, $33,000 mark here. Just a quick micro analysis of this move that we've had in the last couple of days over here. As I showed you in yesterday's video, the Fibonacci retracement from the top here when we came to 45,800 to the bottom here, I said that the 61.8 golden pocket levels here were around about 44,200 to 44,300. And we came all the way just around those levels. They breached them slightly, but we seem to be having a little bit of resistance there. So it may well be that we now have a 61.8 level retracement back down to these levels that are marked down here. And that would be from the bottom here to the top where we've just been. And that would be to around about the $42,600, $42,700 mark at the 61.8 level here. So we'll wait and see what happens, whether we go all the way straight through to the 46K mark here or come back down to retest the 61.8 retracement here as 42,600, 42,700. And if we have a quick look at the moving averages, the exponential moving averages on the monthly chart, very, very important this. Currently, we're finding support on the 21 exponential moving average here. And this is a critical level. We're breaking this 21 monthly exponential moving average. This is what happened in the COVID-19 situation back in March 2021. And again, after the last bull market in 2018, once again, we found support on the 21 exponential moving average on the monthly chart. And once we broke down, we had this massive crash down here. So we really want to avoid going below this yellow line here, which is at 37,000. And that is why the 8 exponential moving average here, which is at around about 45.5, and that's why this 46K level that I've been mentioning for many, many weeks now is a critical level to move back above. And that should give us confirmation that we're very much less likely to go down here. And if we go to the weekly chart, we can see this big bad boy gravestone doji candle formed here yesterday. So while we've recaptured with this candle here, the 8 EMA on the weekly chart, this candle, the gravestone doji, will be weighing down on this. And what we need to do is to draw a line on the wick of that at the top and at the bottom, and the breaking of either of them will invalidate this candle here. So if we break to the top above this, which is at 45,800, then this becomes invalid, and then we're more likely to go to the higher side. And if we break the bottom of this, we're more likely to go to the downside. More like below this candle here, around about here, which is around about 37,000, which obviously is a confluence with the moving average I've shown you on the monthly chart. So this candle is going to play a very important role in the next few days. And on the daily chart, as I mentioned yesterday, that for the first time since up here, since November, we've now broken above all the 3 exponential moving averages, the 8, the 21 and the 34. And we briefly lost the 8 EMA here but we've now recaptured it in the last couple of days. And I showed you yesterday the development of the Hikake pattern on the candlesticks here, which have played out perfectly here. It was these number of candles here. So we had an inside bar candle here, whereby the second candle's high and low, which was encapsulated by the high and low of the inside bar candle here. Then the third candle printed a lower low, but it printed a higher high on the wick of the candle, but on the body of the candle it printed a lower low, which is obviously the condition for the Hikake pattern. And that's usually followed within 3 candles after this one, i.e. the third candle. Within 3 candles of that, we normally get this kind of a printing of a candle, which is a bullish candle, of course. But we got that straight away. So we'll see what happens. It's basically showing a lot of increased momentum here. But this red candle is showing us that that momentum is being lost currently. So we'll see what happens in the next few days. So in conclusion, we're just waiting for this head and shoulders to be playing out. We're in the middle of it at the moment here, between these two key support and resistance lines here at 40,000 and the 46,000. And we'll continue with that tomorrow and see how the price action develops. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you want to leave any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.